Alrighty, welcome back to Weenie Trades. So in this video, I'm going to be talking about the key to the market. So in this video, I'm going to be talking about how the key to the market is how quickly can you realize are you wrong? And that's going to keep you alive in the long run so that you can make really good winning trades in the future. I'm also going to be talking a little bit about Fibonacci retracements and what's a healthy retracement and what's an unhealthy retracement so that you can know whether to hold your stock or get out. So let's get into the trades of the day. Our first trade of the day was on Roku. And Roku, I posted in the game plan, I said in the game plan, oh, I like Roku over 470. Well, here's that 470 mark. I was a little bit early just because we had this nice, good little bull flag. Here's your flag pull. Here's your consolidation, and there's your pop. So I went ahead and went long over 467.50 with a stop just underneath 462.50. Nice, good move up on Roku. I added over 470, and then I added yet again on this dip right here at 472.50. Because remember, I said I was targeting about the 478. Well, that's exactly what I just did. I just took profit right here, took profit right at the top of this supply zone. So if we take a look at the supply zone on the daily time frame, upper wick, sold off, upper wick, sold off, upper wick, sold off. So that tells me this whole area is a bunch of sell zone. So that's why I'm taking profits on Roku right about over here. And then look, I took some more profits off on the back side right about 478. And look, do you see the head and shoulders pattern? Here's your left shoulder, here's your head, here's your right shoulder, and then here's your breakdown right on Roku. Roku proceeded to put in a bear flag, sell off, kickback rally back to the former breakdown area, then sold off, hit the bottom of the demand zone, bounced a little bit, but then rolled over along with the rest of the market. Technically another bear flag over here, and then there's your continuation down on Roku. But let's talk about retracement levels, because there was another trade that I took on Roku earlier in the day. So I took another trade on Roku right about here. I dip bought right at about 470, I believe. So 470, got a nice good move up. But then we had to come underneath that 470 mark and I had to stop out. So as you can see, this was a level because look, we bounced off of it. That tells me if you come underneath the level, that's where my stop loss is going to be. And so I'm going to come out of Roku. And the reason for that is that Roku retraced too much. So if we pull out our Fibonacci retracements, we can go from the low of the move to the high of the move. And normally you'd want it to hold that golden Fibonacci retracement, the 38.2 they say a lot. And look, Roku did not hold it. It started to break down. So if it doesn't hold those upper retracements, it could be starting a heavy new downtrend. So because of that heavy new downtrend, Roku just started putting in more bear flags on the day and could not rally. So just a little bit trapped in the swing trade on the final ad up there. And that's the most important thing that kind of sucks a little bit. The way I managed Roku is not the best. So Roku was an expense trade today. However, we did have some pretty good trades earlier on Roku. So that's the first trade of the day. Our next trade of the day was on Spotify. On Spotify, I was saying I really like this breakout over this 460 level. There's right about here. Do you see that little interaction right there? Nice, good breakout. I did not catch it over 360. However, I did catch it over 365, and this is where the volume started to really increase. Look at the volume starting to go on an uptrend. I love that. Nice, good breakout into higher lows. I just love this setup. Boom, we get this nice, good push up. And as with this red candle started to come in, I went ahead and took some profits on Spotify. And look, Spotify did a nice, good bull flag pop. But then we did a head and shoulders. We had the left shoulder right here, the head, and the right shoulder. And Spotify tended to break down. So I spotted that trade, get it, earlier. But then later in the day, Spotify really rolled over the rest of the day. Do you see that? Just left shoulder. There's your right shoulder, head, right shoulder, breakdown, Spotify to the ground. So that's also has to do with the retracements. If we look at the retracements over here, let's go from low to high. Spotify didn't hold the golden Fibonacci retracement. So look, we bounced there just for a second, but then look, you got to stop out if it starts coming underneath there. And even though I had made the trade free through a ghetto spread, I went ahead and did one more dip trade right about 367, right about here. So I went long, bought Spotify right there, took a little bit of profits, but it wasn't enough to cover the risk on the ghetto spread. So we had to take a hit on that. So we had to go from open P&L of about $700 to $800 to actually down P&L of minus $82 on Spotify, simply because it retraced so much from the highs, because the overall SPY was dumping. So yeah, Spotify from the highs dropped over 11% after making new all-time highs. Usually that takes quite a long time for that to happen. So this market's definitely moving a little bit faster. So that was Spotify, and our best trade of the day was on LMT. And LMT was really good. We had a nice, good trade on it. we said, look at this nice good breakout over 336. Now I missed it right over here, but that would have been the best entry. But right about over here, over 339, I went ahead and went long LMT right about here. Look, we got this nice good push up, pull back, and we started to break up. And I averaged up on my shares, averaged up. But then we started to roll over just a little bit. We had a nice new high. If we zoom in just a little bit, if we zoom in and check out what LMT did, we had this nice good move up, and can you see I was holding this previous breakout area? Once we started to come down underneath there, that's where I went ahead and took my profits on LMT. So that was a nice good revenue trade to lessen the blow of the day. But because of the heavy size on Roku and Spotify, we were able to remove a lot of the risk. You know, we had about $2,000 to make $4,000, but because we ghetto spreaded into the Roku and Spotify, now we're only risking $600 to make $4,000. But the probabilities are a little bit less because they retrace so much from the highs. So nevertheless, a red day, but I'm super proud of my entries and exits. I know that in the long run, this will be extremely profitable. We just need the market, this SPY, to cooperate just a little bit and not be so whippy and selling off and breaking out. And so a little bit crazy of a day, but be sure to get hyped for the course and another day at Weenie Trades Live. Be sure to also like and subscribe. Alrighty, see ya.